Hello, once again, this is Antonio. I'm coming at you with another exciting video. First of all, I would like to start off by saying that this is not financial advice. The purpose of this video is for entertainment and educational purposes only. Also, for those that don't know me or don't know anything about this channel, we speak about stock, cryptocurrency, personal business credit. So we actually subscribe to the channel. It does not cost you anything. Also, you see my email there. If you're interested in collaborating on this channel, we talk about the market, crypto, stock, however you want to do it. We can discuss that on this channel. I definitely want to grow this channel, and I'm not bashful to say it. So, recently, if you have been looking at your portfolio, you definitely know that we are definitely dealing with a recession. Now, the Fed said that we are not in a recession. And for whatever reason, I think that's a blanketed lie. And also, the Feds have increased the interest rate. The interest rate is the highest it's been since 1994, which is 28 years ago, almost 3 decades ago. This is the highest it's been. And I'm going to be honest with you. The Democrats wanted to be in charge. But old Scrooge Biden gonna have to take a test for this. Now, y'all dish Donald Trump a whole lot, and I know a lot of people may click off this video when I said that, because Donald Trump has told a number of fibs, and they're still dealing with some political aspects with him. And it's not to say that I support Donald Trump or not support Donald Trump, but I can tell you one thing: gas prices wasn't at $5 a gallon. You ride to gas pumps, and the half of the pumps are empty. Why is that? You look at your portfolio, whether you invested in stock, whether you invested in cryptocurrency, and they are in the toilet. Why is that? Why are we going through such a things at the gas pump where you are paying $5 a gallon? And I heard in California is $8 a gallon at certain ways. Now, let me dive into this, because Biden is going to have to go through this, and the Democrats are going to have to go through this. If it's a bloodbath in the Senate and the House, then we're going to have to see. And then, of course, in about 2 more years, we got another election. We're going to have to see what happens. But the question is, can you recession proof your portfolio? And I'm going to read some articles. You know, all of these talking heads are going to come up with their own ways of saying, yes, you can recession proof your portfolio. But what I want to know is 7 months ago, 8 months ago, the crypto market was at 3.4 billion. You had young people making billions overnight. And then out of all of a sudden, what happens? The market crashes. The crypto market is not at $1 billion. It's not even at $1 billion. So you still got people with aspirations to become a thousandaire in this market, but it's just not happening. And what's the case? Look like my computer done froze. What's the case? Why are we going through this? Right? Why would the Feds raise the interest rates now? Why didn't they cut the interest rates? Is my opinion. Why raise them now? It doesn't make any sense to cut them now when we already dealing with the highest inflation in 40 years. And then you already are dealing with so much in this market. All right, so hold up. Look like my computer done froze on me. So what is happening here? Okay, hold up. Let's see if it's going to let me share my screen. Because definitely what I want to do is just go get into this and let's talk about what's going on. Sorry about the technical difficulties. You know, when you're dealing with technology, things happen. So the first thing I want to do is I want to talk about the crypto market. And in particular, when you look at, there are 19,920 cryptos, and the market cap for the crypto market is $892 billion. Is not even at a trillion any longer. 7 months ago, the market was at 3.4 trillion. I took a screenshot. I know it's exactly what it was at. Bitcoin 7 months ago went all the way to, what did Bitcoin go through a year ago? Let's see the high, because this is what we want to dive into. We want to talk about the honesty. People are looking in their portfolios, your family and friends, and told you to invest. You to invest your hard taxes and all of this stuff because they told you that you was going to make a lot of money. So 7 months ago, the crypto market in November, I know for a fact, was at 68 billion. I think that's the highest it ever been. Right now is less than a third of where it was at. By itself, Bitcoin by itself was at $1 trillion. Now, when you look at Bitcoin right now, Bitcoin is at 395 trillion. So it lost $1 trillion from that point, because it was like 1.3, 1.4 trillion, and it lost $1 trillion just from that point, right? So what happened? And why would the Feds raise interest rates now? I just don't get it. You got people who've been trying to get houses, and because the Feds are continuously raising interest rates, which they said they may do, and then they reverse course and say they're not going to do it, and then they turned around and did it anyways. Why? Why would they do that? So now the crypto market, all of my cryptos that I've invested in is worthless at this point. And then you already know what happened to Terra Luna. So all these videos I see, put $60 in, you're going to make $1 million. And some people have, right? But I do a lot of videos, and I always say it's not financial advice, but I couldn't with good conscience go to my family and friends and say, go ahead and invest in Bitcoin, because we just don't know the uncertainty of this Biden administration. I'm just going to call it out. Now, have I voted for Biden? I honestly, on this video, I voted for Biden. If I'd have known that the market would have been like this, I'd have scratched my head. I'm gonna just be honest. I mean, because when you done invested so much money in this market, thousands like I have, and for it to be worthless in a little as 5 to 6 months, and it's going to get worse. Let's look at this, the cliff notes here. The Federal Reserve raises benchmark interest rates 3/4 of a percentage point in the most aggressive height since 1994. And the question is, why would you do that? I don't know. Let's find out. According to the dot plot of individual members' expectation, the Fed's benchmark rate would end the year at 3.4, upward revision of 1.5 percentage points from the March estimate. This is the single reason, what I won't say single because that'd be wrong. This is one of the most reasons why the crypto market has crashed, because hedge funds have put their money let's be honest, they have put their money into Bitcoin, because Bitcoin was the place to put your money. You put your money in Bitcoin, things work right. It happens. Officials are significantly cut their outlook for 2022 economic growth, now anticipating just 1.7 gain. So let's keep going. This is very, very interesting. In the GDP down from 2.8 from March. Just in March, we already down. And then the Federal Reserve on Wednesday launched the biggest broadside yet against inflation, raising benchmark rates 3/4 of a percentage point in a move that equates to the most aggressive hike since 1994. Ending weeks of speculation, the rate-setting Federal Opening Market Committee took the level of its benchmark funds rate to 1.5 percentage to 1.75 percentage, the highest since the COVID pandemic began in 2020. Stocks were volatile after the decision but turned higher as the Fed chairman Jerome Powell spoke in his post-meeting news conference. Today's 75 base point increase is unusually large. You got doggone right it is. And I do not expect moves of this size to be common. Really? Did you rehearse this in your dressing room before you came out with the highest interest rate since 1994? You can say whatever you want about Trump, but Trump threatened to fire you if you want to raise them interest rates. So you waited to Biden gave you a nod on this bad decision. Now, I don't care. People might be like, this is a good thing. You got to raise it. We running out of money. Don't raise it now. My portfolio is red. Companies that was planning on merging won't have not. It's just a bloodbath. We want to see progress. Inflation can't go down until it flattens out, Powell said. If we don't see progress, that could cause us to react. Soon enough, we will be seeing some progress. FOMC members indicated a much stronger path of rate increases ahead to arrest inflation moving at its fastest pace since 1981. Now, this was the transfer between Jimmy Carter and Reagan at this time, and Reagan came out with the Reaganomics, which people still praise to this day. Some people thought that it was stupid. People think Reagan is the best president. I don't. I think a lot of people going to have ups and downs, but when you look in your portfolio and you see money, that's the best president. I don't care if you're Democrat or president, I'm Democrat or Republican. When I see that my portfolio looks good, you're a good president to me. The Fed's benchmark rate will end the year at 3.4, according to the midpoint of the target range of individual members' expectations. That reflects on the upward revision of 1.5 percentage points from the March estimate. The committee then sees the rate rising to 3.8%. So it's going up again. They're already telling you it's going up again, a full percentage point higher than what is expected in March. I'm telling you, it says it here that it will go up again. They said it. I didn't. The rates will go up again. If you're trying to buy a house, buy your house now, because the rates will continue going up. The housing market is another thing that is out of the roof, and people are being priced out. And I'm in the back of my mind, I think that the housing market may bottom out, because when you see places like Atlanta where we are deemed affordable housing. Now, if you're a real estate agent, you might give this video a thumbs down because you want to make money, but when the interest rates is high, the cost of houses are at the all-time high all over the world. What else can you do? Right? So let's dive over here and let's read this article. And this article is talking about how to recession proof your portfolio. It's interesting. And because when you see that the market was just at 893, now it's at 891, it's still going down, folks. All right. Matter of fact, before I even get over there, and I'm gonna read this article, let's get over here and let's see what we see, right? All right, so let's see what we see. Let's talk about the top 10. The top 10. Let's talk about it. Bitcoin. More to talk about the market cap. 131. I'm sorry, that's Ethereum. 395 billion. Ethereum, 131 billion. Tether, 69 billion. USD coin, 55 billion. Binance, 35 billion. Binance, 17 billion. Cardano, 16 billion. XRP, 15 billion. Solana, 10 billion. Doge and Polkadot are both at 7 billion. I know I said top 10. Those are the third. All of them are dealing with a third from like 7 months ago. All of them were doing much better then. It's just ridiculous. All right, so Uber CEO Dara said at a Bloomberg event earlier this month that he thinks the ride sharing and food delivery giant is recession resistant. Shut up, because I know people who do Uber and the rates are stupid. You're giving out minimum wage rates where the gas prices are at an all-time high. Drivers are tearing up their cars and can't even fix their cars if something go down. Some drivers can't even get a oil change when they're driving 30 minutes, and this is not an exaggeration, and only making $7. That's not an exaggeration. I know drivers, and it's ridiculous. So for him, it's a recession proof, but the drivers that's tearing up their cars is not. That may or may not be true, but Wall Street clearly disagrees. Uber stock has lost more than half of its value this year, so Dara is all cap, and I said it. So I'm gonna disagree with this article. The drivers that even work for you can't even get their car fixed. If they need an alternator, a starter, or whatever it is, they can't afford it because the gas prices are higher. You're paying more at the pump, but the rates that you're providing the drivers is not self-sufficient. So his stock is down just like everybody else. But with fears of recession mounting due to runaway inflation and continued plans from the Federal Reserve to jack up interest rates, now may be the best time for investors to find recession-resistant stocks. I don't know if that's the case, right? Typically, shares of electric and water utilities, consumer staples like food and drinks, both booze and non-alcoholic, hold up better in downturn, especially since many of those stocks pay dividends. Analysts at Wells Fargo said in the mid-year market report this week that they are now favor of full market weight allocation, consumer staples, and utility stocks due to their traditional resilience in slowing economy. All right, so let's start talking about some of the shares where they claim it's recession proof. Shares of electric and natural gas. Now, this is from CNN Business, and they're saying that some of these stocks are recession proof. Shares of electric, natural gas, Sempra, Con Ed, Exelon, and American Electric Power are up slightly this year. So let's go and look at this. I don't need this article anymore, so let me pull up my Webull and let's see if there's some truth. I'm not going to look at all of them, but we're going to look at a couple of them. Once that manifests itself, then we'll go ahead and look at them. Utilities and staples are considered essential items. You may not go on an expensive vacation or out to dinner as often in a recession, but you're still going to pay the bill to keep the lights on and buy Coke, some General Mills, cereal, and Kraft mac and cheese at the supermarket. I believe that. I think that that's truth. Food staples are hard to substitute, and the last items on which households tend to cut spending, said analyst PNP Paribas in a report this week, adding that the fall in demand is unlikely despite the breadth of food price increases. Now that my Webull is up, let's look at SRE. Let's see what happens. Let's see if they are up like it's being manifested. So let's go to Sempra. We're not going to look at all of them. So here, Sempra is at 141. The 52-week high is 117. The 52-week low is at 173.28. and the market cap is at 44.45 billion. All right, so and I know that they're saying that they up for the year. I'm not oblivious. I read the article clearly, and I understand what they're saying. Let's look at ED. Come on. Let's look at ED. This is stupid. All right. All right, let's see this. So the 52-week low on consolidated Edison is at 68.53. The 52-week high is at 101.12. Currently is at 87.81. And the last one I'm gonna look at is Exelon, and that's XEXC. Let's look at that quickly, just to see what we're if there's any truth in there. Let's see what we're looking at. All right, so Exelon 52-week low is 31.25, 52-week high is 50.71. So that one is probably doing a lot better than the other two stocks I looked at. All right, so let's keep going. All right, so to end that, grocery store giant Kroger reported better than expected sales and earnings Thursday morning, and also provided an upbeat outlook. The stock fell along with the broader market Thursday, but shares are still up 9% on the year. The S&P is 23%. So let's see what we're looking at here, so we can see what Kroger is looking at. So right now, Kroger is not doing bad in the market. Here, Kroger opened the day 50.15, high 50.25, currently 47.49. 52-week high is 62.78, 52-week low 63.77. So some people wanted it to fall to 63 so they can get in on the stock. And if you got in on Kroger when it fell down to 63, right now you still up greatly, right? That's 11 percentage points that it would be up. Well, $11, I mean, the percentage points that are up. So it just all depends. If you got in it at a $62 high and you got in it at that time, you're not happy because you're down on the stock. So that's just the way the game is played. All right. Several other food and beverage companies also are bucking the broader market's downward trend. Shares of Moslin Coors, Hershey, Kellogg, Campbell Soup are all in the green. So let's see what they're talking about here. So let's look at the TAP on this one. And they're saying that these are in the green, and they are in the green. So today they open at 50.75. Right now is at 50.80. The high was at 50.89. It's doing good right now. 52-week low, 41.53. 52-week high, 57.79. So this is the purpose of this video is talking about getting into the recession proofing your portfolio. These are all stocks is on the NYSE, New York Stock Exchange, and basically what's going on, these companies are performing great. So what they're saying is, if you want to recession proof your portfolio, invest in blue chip, these type blue chip stocks where people are not going to deviate from. You're going to buy your chocolate, you're going to buy your Power Bill, you're going to go shop at your Kroger's or your Walmart or stuff like that. So the high today, the open today was 202.76, and this Hershey 52-week lows 165.49, 52-week high 231.60, currently at 205.35. That stock is in the green, and this is recession proofing your portfolio. So let's look at catalog. Just look at catalog here. Okay, catalog opened today at 67.17. Right now they're at 67.90. The high today is 68.34. 52-week low 59.05. 52-week high 75.56. So catalog is the way to recession proof your portfolio. Let's look at Campbell Soup, CPB. All right. CPB. All right. So right now, this is another stock that's in the green. Even though it's flashing red, it's definitely green. Open today 45.45, high 46.05. The 52-week low is 39.76. The 52-week high is 51.94. So this article is very relevant and is very real. All of these stocks are doing well. And let's keep going. These are energy stocks that we're going to look at, some of them that's performing well. And these are stocks where people who invested in these and have taken the stock tips directly from these stocks are performing in a good way, right? So let's see. This is another stock. So let's post these because these stocks are in the green. These stocks are in the green. And if you're looking at stocks that's going to possibly help bolster your portfolio, I'm flashing these stocks because they're all in the green today, not just this year, today. All right, so we're gonna keep going and we're gonna end the video soon, but let's keep going. This is a teaching moment for everybody, right? Because most of the stocks that I'm not in a lot of these companies. I'm in a lot of other stocks and cryptos, and I'm not in the green. So, all right, so let's talk about Chevron stock, which is now one of the largest holders of Warren Buffett, Berkshire Hathaway. And let me show you something. And people that don't know, if you begin into the stock market, let me show you what Berkshire, if you want to buy a share of this company, what you're going to be spending. Let me just show you that. Hold up. Hold up. Hold up. So Berkshire don't pull up. Let's see. Let me see if this is the right one. Let's see. Yes. So if you wanted to share a Berkshire, this is another company that's in the green. So Berkshire opened today at $403,729. The high is $405,472. So if you wanted to stock a share of Berkshire, you're going to pay $404,000. So they are telling you, if you come in this playground, you are going to pay some money. So just be mindful. And the market cap is 594.89 billion with a B, billion. So that 52-week high is 544,389. Just imagine, most people do not have you in the big league when you get into that arena, just to let you know that. So let's look at CVX. Let's look at CVX. X. Let's see what we're looking at. Chevron. And we're not going to pull up everything, but these stocks are performing great. So they open today at 154, high 154, 52-week low 90, 52-week high 182.40. So this stock is still performing great, at, well above the 52-week high. So we probably won't keep going back and forth. You know, this is just show you that the companies that even Warren Buffett invests in are doing great, or he would have pulled his money. Or another company that he backed, we got to look this up, is OXY. And let's look at this. We don't need that anymore. Let's look at OXY. All right, let's look at that. This is another company that's in the red. Open today at 56.58. The 52-week low is 21.51. 52-week high is 74.04. And this is also a company that Berkshire has invested in. All right, so let's keep going. those stocks are in the green, and it's proven that they're in the green. If you want to recession proof your portfolio, you definitely going to have to um, know what stocks to buy and get into, because a lot of you have invested in a lot of stocks that we thought was going to perform, and they just did not perform well. And it's just the truth, right? Those are the truth. A lot of these stocks did not perform well. All right, now, all right, I'm gonna say this before I end the video, because I didn't realize the video was already 30 minutes. All right, even though there are growing concerns about surging oil and gas prices potentially pushing the economy into a recession, some experts still think energy stocks will hold up better than other parts of the market. Uh, Profits in the energy sector are rising much faster than the sector's overall valuation. So there remains plenty of upside. David Trainer, CEO of investment research firm New Constructs, said in a report. Trainer said, and these are going to be the last two we're going to look up, then we're going to add a video, that he's particularly bullish on Brazil's Petrobras, Shell, and Phillips 66 due to superior profitability and very attractive variations. So let's look at these two stocks, PBR, and look at Phillips 66. I remember Phillips 66 because that was a company that was big in the South. You don't see them in the South anymore, but I remember going to that gas station with my parents when I was younger in the South, but you don't see Phillips 66 anymore. So this is another company that 52-week low is $7, 52-week high is 16. They open the day at 12. The high today is 12.12. Right now they're at 11.93. So this is definitely one that you can invest in if that's what you want to do. And the final is PSY. Let's look up that one. PSY. All right, so let's look at this one. All right, so PSY is another one that's performing excellent. These are all stocks that was researched heavily before this article was created. A lot went into this article. That's why I'm reading it. That's why I took my time to dissect it. Please like this video. Please subscribe to the channel. If you'd like to see content like this more, please let me know. All right, so Phillips 66 opened at $96.82. The high is $97.37. 52-week low, $61.16. 52-week high is 111.28. These are recession-proof stocks. They are proven that they're doing good. And if you are interested in these stocks, don't hesitate to invest in these stocks. Turn your portfolio to green. There's still a way to do it, even though I vent a whole lot in this video because I felt like venting. I feel that the Biden administration needs to be honest with the people. They need to tell us that we're in a recession. They said that we are not in a recession. I guess they feel that the people don't want to be fearful, but we are definitely in a recession. But I'm showing you stocks that's recession proof. And if you're interested in investing in these stocks, I listed it all in my chat box. For everybody that's on this video, please don't hesitate to subscribe to the channel. Big Mo, are you in Polestar still? Absolutely. Let's look them up. GGPI. Most of the stocks that I'm in, because I'm so much upside down in these stocks, I have no choice but to stay in the stocks. But right now, Polestar, which is parent company is Volvo, Chinese Volvo, is at $8.85. The high is $8.88. 52-week high is $16.41. The low is $8.53. So Polestar is still flirting with their 52-week low. And like I said again, once you get in these stocks and you are upside down in them, you just gotta, not financial advice, you just gotta hold on to them for the time being. But if that's the case, I showed you some stocks that some of them was unaffordable, some of them may be affordable where you still can put your money in the market and still make some money. So thank you for everybody who came on today. Please like this video, share this video. The Fed's increased the interest rates, highest since 1994. They plan on increasing the interest rates once more in 2023. It's a bloodbath in the market. So you got to be able to still be able to make some money. The Fed's raising the interest rate is one reason why the crypto market is under $1 trillion. It's just so much going on in the market, and I want to make this video. So this is Antonio with Team Tiggio. Please like, comment, and subscribe. And I will see you next time.